Yeah. So in terms of funding the EB5, we're going to go into a few terms and definitions, some of which you may already be familiar with, other may be new to you. In case you have any questions, we'll answer them towards the end of the presentation. Or if you're like, hey, I might miss this question that's on my mind, you can feel free to put it in the chat and we'll answer them in the order it was received. And just in terms of my background, so I do this day to day. So I'm a FINRA registered investment specialist. And broadly speaking, our firm, we help with independent project diligence, funding strategy. We work with attorneys on the filing side too. So we are set up as a platform to support applicants throughout the EB5 journey. And most importantly, in terms of a disclaimer, so nothing what I share today is legal advice or financial advice, because any of this has to be personalized to your own unique situation, right? The main thing to understand is when you start reading up on EB5, you start coming across this term called source of funds, or it's abbreviated as SOF. And if you book a call with a regional center or project, I mean, they might even casually ask it, or you see this casually exchanged in different conversations threads too. Where are you in the SOF process? Are you SOF cleared? Now, what does this mean? So the source of funds process is a process of proving where we got our $800,000 from. Now, this is the process that the attorney undertakes. Interestingly, the EB5 forms themselves, they take maybe half a day to fill out. And using all of the AI tools we have, 15 minutes to fill out. So what does the attorney or the legal team actually do for 6 weeks? Mentioned 6 weeks is average time to file the petition. They actually take on the hat of a financial detective. So let's say, for example, Ganesh, you work at Microsoft, just giving an example, and you have about $50,000 in savings. Now, how do we show or prove that it's lawfully obtained? So the attorney would ask for 2, 3 years of bank statements, tax records, pay stubs, and they actually have seen some of them go with highlighter, statement by statement. And they say that, Mr. USCIS officer, please look at Ganesh's statements. For this amount, he's paid taxes, the employer's paid taxes, and we can show an accumulation in the savings account. So it's a very exhaustive, detail-oriented process that takes days to weeks to complete. And the thought process here is that every dollar you have to trace back to a source. And what they want to avoid is cash deposits. That's a huge red flag. How do you explain where you got cash from? Or incoming and outgoing transfers that are happening without a defined purpose. Now, what's also important to understand with source of funds is the paper trail of the funds. Because we're going to talk about a few different funding strategies, this becomes very relevant. In terms of the paper trail, what we have to look at is where are the funds coming in? How are they being transferred? Most importantly, they have to come to the investor's account. So they cannot go directly to the project's escrow. So the investor has to show that they are directing the funds. So this applies almost universally to any source that we pick, whether here in the US or internationally as well. And finally, we fund the project. So this is the path of funds that we are talking about. And it's an important consideration too. And one of the questions that comes up is, hey, Nikin, my parents, my brother, we have funds in Dubai or we have funds in India. Can they directly put that in the project on my behalf? Big no. Why is it a no? Is because of this path we have to follow. At the end of the day, we have to show that the applicant is responsible for directing these funds. And if the funds go not through the applicant, but to the project from the source, then we are skipping that requirement. But coming to the different sources, the most common source, the most easily traceable source, of course, is earned income and savings. Now, what do we have to show for this? So, the moment you speak to any attorney, in their checklist, this will be there, which is your tax returns, pay stubs, bank statements showing accumulation, and also employment verification letters. And proactively, let's say you're just getting started with the process, what are the things to watch out for? As I mentioned, cash deposits, we need to watch out for that. Second is any outgoing or incoming transaction over $10,000. So each of those transactions needs a purpose. And what is a flag that emerges here? Like in our community, broadly speaking, we tend to help friends out, right? So we send $10,000 to help a friend buy a car, then they repay us from an account in India, or maybe a relative pitched in to help us buy a home, right? Or to help us with studies for education purposes. Now, let's take that friend example. If that friend now has moved to India and closed his US bank account, he doesn't have any documentation behind it. So we might have to get an affidavit to that effect. For most applicants, this is a non-issue. These are very simply transactions that need to be pointed out and clarified with the attorney. But sometimes there are situations where it might be $30,000, it might even be over $100,000 of funds which are not traceable. So then they cannot be used in the EB5 application. And it's best to know this at the earliest. So that way we can plan and identify another source. Now, moving on, there's another very common source of fund, which is known as a HELOC. A HELOC, the full form of it, is a home equity line of credit. To give you an example of what it is, let's say I bought a home in 2018. It was valued at $1 million. And now it's several years later, and the home is now valued at $2 million. There's an increase in the value of the home of around $1 million. And let's say there's still a pending mortgage on it of like a few $100,000. We subtract that mortgage, and now we have at least $500,000 in equity value. And the advantage is we can borrow against it. And when we borrow against it, we are taking it as an interest-only loan. So that loan amount, we don't have to make any principal contributions on it. And in terms of the rate too, you can get as low as 5 to 6%. The loan to value as well, how much ever that value is, you can, we have seen cases where it's even up to 90%, but 80% is the standard. But the key limitation here is it takes time. So in case you're considering HELOC, just to be proactive, you have to, I'd recommend getting an appraisal done at the earliest. And you might also have to shop around different lenders. So I'd recommend starting that process too. In case you're in the US, we can also help you run a search for different lenders. So it can be a resource on this aspect. But timeline-wise, you just want to factor in a 1.5 month timeline in order to tap into the HELOC. Now, on the documentation side, we've covered how important that source of funds aspect is. You do have to show how you purchased the original property and also the continuous interest payments you've been making on that property. If it's been paid off, that final payment as well. And also documentation on the HELOC facility too. And what is like a flag that might emerge here is that sometimes, especially in the Bay Area, we have seen cases where applicants have made some of the interest payments using crypto, or they have gotten help from friends and family to make the interest payments. And no one 5, 6 years ago, I mean, if you're buying a property, especially if it's a residence or even an investment property, no one prepares themselves for EB5, saying, hey, I need to have a clean source of funds. That never happens. So even in this case, we have to seek those clarifications, get some affidavits signed. And in most cases, it's a non-issue. But the key is just being aware that if any of those interest payments were made with help from friends and family or through other investments you have done, then there's additional clarification that needs to be sought. Moving on, a related source of fund to a HELOC is a cash out refinance. Now, what is the difference between the two? The underlying concept is very similar, is that you have some value in your home and you're using that facility. The difference with a cash out refinance is that you bought a home at a higher interest rate, and now the interest rate environment is lower. Whereas with a HELOC, you very likely bought the home at a lower interest rate, and perhaps the interest rate environment is now a bit higher. And also, for a cash out refinance, it often happens when you're fully paid off the mortgage on a home. So, in terms of the interest rate, there is a slightly higher rate here. You do get a similar amount of loan to value. Of course, you have to do the appraisal, factor in the processing time as well. And you do get a new mortgage on the home effectively. And the difference in value is given to you as a check. From a documentation standpoint, the documentation is the same as what we discussed with the HELOC. Moving on. Now, this is a part of funding EB5 that very few people are aware of, is using your 401k funds. And there are two segments to this. One is what you can do with your current employer's 401k, and one is what you can do with a former employer's 401k. Now, with your current employer's 401k, there is a lot of limitations to it. And the main limitation being you can only take up to $50,000. Thankfully, it's an interest only loan. Each spouse can take up to $50,000. And even the interest you're paying goes back to your 401k. So it's almost as if you're borrowing from yourself. So through the current employer's 401k, you likely have access to 50 to 100k in funds. Now, what about a former employer's 401k? And here's where the picture is very different. If you haven't rolled over your former employer's 401k to your current employer's account, you can actually use the entirety of the amount that's present. And let me repeat that one more time. If you have any funds in a former employer's 401k and you haven't rolled that over to your current employer's 401k, you can use the entirety of the amount present in it. And the other advantage is you can use that without any penalty or paying taxes on it. And how do we do that? The way you do it is through a facility known as a trustee to trustee transfer and through a self-directed IRA. So basically, those funds from a former employer's 401k account are moved to a self-directed IRA. Then you change the trustee from the S&P 500, a mutual fund, to the EB5 project. The funds then get paid back from the EB5 project to the SG IRA. So they never left the retirement ecosystem. And that's the reason that you don't pay any taxes on it or a penalty on it either. Yeah, please go ahead, Ken.
Yeah. Hey, Nikin. So this is very interesting. Thanks for letting me that. I was not aware at all about 401k because I always thought there was a penalty if you withdraw it. So why does this not have a penalty? Curious to learn what laws govern that. And so once we transfer it to the investment, after that, should we transfer it back to 401k, or what is the process? Let's say after 5 years, if we get the returns back, what is the process at that time?
It
Yeah.
happens automatically.
Okay.
So you move on your end the
Mm-hmm.
funds to a
Mm-hmm.
self-directed IRA account or a
Mm-hmm.
SIDRA account, and then it's invested in the EB5 project. It matures and it comes back to the
Mm-hmm.
SIDRA account.
Okay.
So it happens automatically. And the law
Mm-hmm.
that governs it is that basically it's never left the retirement system to begin with. So it's never come to you personally. It's
Mm-hmm.
still within your retirement
I
account.
see. I see.
And the
Mm-hmm.
thought process here is that some people think that, hey, I'm losing out on my gains in the S&P 500.
Mm-hmm.
But since this is retirement funds, you don't have access to it till 59 and a half.
Exactly. Anyway, not yeah. Yeah.
Yeah. And the other aspect here, which is why I cover the path of funds at the beginning,
Mm-hmm.
is the primary applicant has to be responsible for directing these funds.
Mm-hmm.
So you still have to show these funds are under your direction.
Mm-hmm.
So unfortunately, this facility is only limited to the primary EB5 applicant. So if your spouse has some funds in a
Mm-hmm.
former
Mm-hmm.
401k employer account,
Mm-hmm.
then you have to
One of
decide who's going to be the primary
like
applicant because
okay.
only they can use this benefit.
Got it. Got it. Okay. And can we do 100% of a prior employer?
Yes.
Okay. Sounds good. Sounds good. And yeah, I understand. I mean, of course, there won't be any growth because, anyways, either 401k funds or any funds that you are putting from HELOC or anywhere else, that will not have growth.
Yeah.
Right? Yeah, and that's given. We have to not worry about growth here. But would there be depreciation of these funds?
It's invested as per the
Mhm.
regular EB5 investment, right?
Mhm.
So a typical EB5 investment, we're talking about the top regional centers, it's
Mhm.
0.5% per year.
Okay.
So overall, it's set up for capital preservation
Okay.
and no growth,
Mm.
basically. But there
Got
wouldn't be a depreciation. I mean, if you count
it.
inflation, sure,
Mm.
yes, there's some value loss there, but
Right.
the capital would be protected.
Makes sense. Cool. That sounds great. Thank you.
A quick question on this same topic. So is this considered as a loan against GIRA?
It's not considered a loan. So it's considered the best way to think about it is if you have funds in a former employer's 401k, you can roll it over to your current employer or you can roll it over to the project. So that's what you're doing here. Basically, you're rolling it over to the project. And when the project matures, it comes back to the 401k account.
And we need to show the trial of investing and then getting the money back, or it happens automatically.
That happens automatically. I mean, what USCIS cares about is the source of funds at the moment you invest, right? So, in terms of the repayment that happens later, the EB5 project, they already have the bank account wire instructions. So they'll just wire it back to where the funds were initially wired.
Get it. So one other question around this. So I actually moved my past employer's 401k into a personal IRA. Okay, an individual IRA. It's not an
Mhm.
SDIRA. I think there is a difference between individual IRA and SDIRA, right? So do I need to move these funds from my individual IRA to SDIRA again?
That's a good question. And this is like very nuanced. So happy to connect with you one-on-one on this. It
Hmm.
depends on the internal structure of that IRA, right? So sometimes the IRA, they have some rules around how you can direct the funds or what you can do with it. And
Sure.
there shouldn't just be any prohibited activities there, right? So you should be allowed to make real estate investments because that's basically what EB5 is. Yeah.
Next one question. So my wife's 401k and I have my 401k and these are current 401ks. So I can only extract 50k, right? From both the accounts. So altogether 100K I can get.
That's correct. So from our current employer's 401k, the maximum we can do is take out up to a 50K loan.
Right. And then my wife's 50K as well, from my wife's as well, correct?
Yeah.
So, and so that trail, the USCIS will need to see, correct? It came from my wife's 401k when you transfer to EB5.
That's a very good question. So in this situation, your wife would basically have to gift you the funds.
Right.
So that is another document that has to be executed. It's like a one-page document. It's a gift deed that has to be executed. But that's a good question, and this is the answer for it. Yes.
Thank you.
I appreciate the engagement and all the questions. But moving on, another very common source of fund is loans against stock. So this could be against public stocks, or basically if you have an investment account or brokerage account, taking a loan against that. And it can be against vested stock as well, especially if you're working in a big tech company or companies here in Silicon Valley. And the best part is, in terms of a loan against stock, you have very favorable rates. So you get even the prime rate minus 1%, which means you can take a loan at 4.5, 4.7% interest per year. It's an interest only loan. That's an important consideration too. The loan to value differs. So we regularly see at the higher end around 70%, but not higher than that because the stocks tend to be volatile. And in terms of the best brokerages to take this out against, you of course have Robinhood, Fidelity, Charles Schwab, but the one that consistently comes out on top is Interactive Brokers. So they go by IB. And the differences with the ones I mentioned earlier, you can fund in about 2 weeks time, or you can transfer your assets there and get ready to take the loan out in about 2 weeks time. Interactive Brokers takes about 30 days. So they do have a longer cooling off period. And an important consideration here is you can take a loan against stock in two ways. You can do it as a security based line of credit, or you can do a margin loan. And a margin loan is very risky because you can get margin called if the stocks dip below a certain value. However, with a security based line of credit, it's also called a SB lock, you have more protection. You'll be given more time. It's called a cure period or a relief period. You can transfer more collateral into the account as well. It doesn't even have to be stock. You can transfer more cash into the account. And that's a safer way to set this up. So I'll take a pause here. Does anyone have any questions related to this? Because this is a very popular topic too.
So you said it's just 50 to 70%. So what determines how much percentage can it? It's like if I have it in Robinhood, will they determine how much I can take?
It's dependent on the underlying stocks.
I see.
So for example, if it's an index fund, then you'd be on the higher end. But if it's a single stock, like Nvidia, Amazon, it's based on that quality of stock, right? So Tesla, Nvidia are very volatile, so it would be on the lower end. But if it's a more durable company, then it would be on the higher end. The best course of action here is to actually shop around. So speaking to Robinhood, Charles Schwab, Fidelity, and just giving them a pitch, which is, hey, I'm willing to move my entire portfolio here. What's the best you can do in terms of the interest rate and the loan to value? So you can basically pit them against each other to get the best deal. And we have seen E-Trade, Morgan Stanley, offer the best personalized deals in this context. So we have seen them do something along the lines of, hey, for 90 days, the first 90 days, it would be a variable rate. Then after that, we'll lock you in at 4.5% for the next 2 years or so. So E-Trade is very customizable. And in all of these platforms, just given the volume that we are talking about, you would automatically be in the platinum tier or the highest tier. So you'll have a dedicated relationship manager. So they would be the ones to reach out to and speak to, or you'll be directed to them to begin with once you even fill out the contact form.
Makes sense.
Awesome. Moving on, another.
Just one
Oh, yeah.
quick question on the stocks. So, I mean, Robinhood and most of these banks, they offer margins, right? Like if I instead going for a loan, if I am withdrawing, keeping the margins still, being the primary source for stocks, is that acceptable?
Margin's fine too. Yeah. So it's mostly.
I don't want to go for a loan, but I want to withdraw a chunk of money, including margins. I may pay the interest every month for that margin to the bank. It's giving the money as a loan for stocks. Is that still viable?
If it's a traditional financial institution, like I mentioned, they would likely set it up as a security-based line of credit. So if they're not doing a margin loan, the product that you'd be using at the banks would be an SB lock. And as I mentioned, that's a much safer product to use because in case the stocks are volatile, you'll be given more time to fund the collateral position or even the actual underlying stock position. So they wouldn't automatically start selling any of your underlying stocks. But with a margin loan, whether we like it or not, it automatically happens. So if the stock price drops, then the lender has the rights to start selling it without your permission.
Right.
Yeah. Hope I answered your question. And related to that is also personal loans, right? Or unsecured personal loans. And there has been a change in USCIS's stance towards these loans because a few years ago, they kind of accepted any mix of funds. So even if you had a large amount of personal loans present in your 800K, then you're fine. USA has approved multiple petitions to that effect. But more recently, especially since October last year, they have become much stricter. And now the Attorney's General recommendation is if you're taking out any unsecured loans, do not have more than 150K or 200K of it in your overall funds mix. Now, why do they recommend that? And what has been a change in the USCIS thought process? Primarily, USCIS wants to look at your repayment ability, like your net worth and your ability to repay the debt. And what they have seen in a few cases with EB5 applicants, and that led them to change their perception entirely, is that there were applicants who were perhaps making 200K, 300K in household income. Their take home wasn't as much, and they had a huge burden of these loans, and they had a lot of interest payments to make. And USAI has automatically defaulted to, hey, we don't see you comfortably able to make these payments. If that's the case, are you using the EB5 project as collateral by any chance? Just give me one moment. I'm hearing an echo. I'll be right back. Hopefully that's resolved. Yes. Now, when we're taking out unsecured loans, what do we watch out for? Let's say we do have a funding gap of 100K, 150K. We have to use these loans. The main thing you want to look out for is in the loan sanction letter. You shouldn't have any prohibited activities. And this is where most online lenders fall short. So if you're using, or if you're thinking of using SoFi or any of the lender marketplaces that are available now, they have restrictions in their sanction letter. So they don't allow you to make investments, or they don't allow you to invest in any kind of speculative deal, so to speak. So sometimes they allow you to make investments, but more in index funds, mutual funds, whatever the case may be. So this is the main flag to watch out for. And what are some lenders that come out on top for these loans? We do have Broadly speaking, credit unions are very favorable. And the most common lender that we have seen for this purpose is the First Check Credit Union. Think before they were previously called Digital DCU, Digital Credit Union, and they renamed to First Check Credit Union. Another funding aspect to cover is, of course, fund transfers from India to the US. The main consideration when transferring funds from India is what is the tax impact and how much can I transfer while being under certain limits. There are two ways to go about doing this. One is if you are an NRI, very likely you have an NRO account set up. And if you transfer funds through the NRO account, you can do up to $1 million a year without any kind of penalty. However, if an Indian resident is transferring you the funds, then it's up to $250,000 per person per year. And interestingly, the new Indian tax year has just begun this April. So for a lot of families and individuals, they still haven't used any of this, right? And this is per PAN card holder. So between parents, husband and wife, for example, you can do $500,000. And for people who have external or extended family and external friends willing to support them, you can do much more. And they are very simple forms to file in order to be eligible for this exemption. And if you work with a CA, CPA, they'd be able to support you on this. We also occasionally see some very creative source of funds strategy. In one case, we supported an applicant with a gold loan because they had a lot of inherited gold and they were able to leverage that for the purposes of their EB5. And what's becoming more common these days is a loan against property in India. I can go into this in a lot more detail. I can have a separate 1 hour webinar on just LAP. But in a nutshell, if you have any kind of property that is not agricultural land, so that's very important, with a structure on it, a lot of banks are open to lending to you. But the most favorable banks that we have seen are IDBI and IDFC Bank. They allow you to borrow against property. And interestingly, it doesn't have to be your property. So it can be a family member's, it can even be a friend's property. And the funds can be gifted and transferred to you in the mechanisms that we covered earlier. So it can come to you in your account and you can take the funds out of the country, or they can directly come from the residence account to your US bank account. Then we do also have gifts from friends and family. The different sources that I mentioned earlier, any one of those sources can be used as a gift. So there's no restriction on what can be used as a gift. But the important consideration is anyone gifting you the funds becomes a mini EB5 applicant themselves, as in they also have to go through the source of funds scrutiny that the attorney would put you under. They have to submit tax records, bank statements, just to give the attorney and thereby USCIS that transparency into how they accumulated the funds and that they were lawfully obtained. So they are all traceable back to the source. Now, another common question that comes up that, hey, Nick, can I have a brother, uncle? Can I get the entire 800K gifted from them? And what might be the potential tax impact? Thankfully, if you're in the US, there's a lifetime gift exemption of $13 million. So this entire 800K safely falls within that lifetime exemption. And this is to both the sender and receiver, right? So you just record that gift deed and you put it in your yearly tax return. So you just inform the IRS that this transaction has happened. And that's pretty much all the documentation that's necessary for this. Now, The last point I wanted to cover is over the past 2 years, there's been a lot of regional centers offering regional center loans of up to $400,000. And starting in October again, there was a lot of scrutiny on these loans, and now they are effectively shut. And unfortunately, for hundreds of people who have taken these loans, they received RFEs, NOIDs, and in certain cases, notice of intent to revoke as well. And we know very little, and personally, I know very little to comment on this. But for all intents and purposes, it's an evolving situation. The RCs that were doing this have essentially paused or terminated these programs. And everyone's trying their very best to find out how to support the people who are impacted through this. Yeah, please go ahead, Ganesh.
Okay. What are these regional center loans and why do they come under this skepticism? Is this similar to Federal Union or different from that?
This is very different. So this is a large regional center, basically setting up a sister company.
Mhm.
And let's say the regional center founders are rich individuals, which they are.
Mhm.
They kind of deposit 10 million, 20 million in
Mhm.
this entity. And
Mhm.
this entity then loans out the funds to investors who are investing in their EB5 offerings. Right. And the skepticism that USCIS had is that you're basically taking funds from one hand and putting it in another hand.
Okay.
So ever since the beginning of the EB5 program,
Mhm.
what EB5 investors were prohibited from doing is
Mhm.
borrowing against the project, right?
Mhm.
So interestingly, in real estate, that's very common. So if you go
Mhm.
to any bank for that matter,
Mhm.
and if you say, hey, I have a piece of land, or not even that, is
Mhm.
I'm bringing this consortium of the landowner, this architect, developer together. Can you give
Mhm.
us a loan to
Mhm.
realize this? The bank will provide you that loan. That's the,
Correct.
but in EB5, it's different.
Mhm.
Every dollar of the 800K has to be
Mhm.
personally attributable to the
Mhm.
investor. So you cannot borrow against the
I see.
project.
Mhm.
And even though many of these structures were set in, set up or set in place by the best and brightest in the industry, and no one in
Mhm.
USCIS would dare to be accused of the term innovator. That is
Mhm.
not how this industry operates. Everyone is like gray-haired, conservative. If you
Mhm.
interact with them, you're like, they don't even use Dropbox. I mean,
Mhm.
it's documents being exchanged on mail and mail, right?
Yes.
So it was set up with well understood and best practices.
Mhm.
However, sometimes with USCIs, it's like reading tea leaves. The only
Mhm.
way you know is by responses you get.
Got it.
You don't
Got
show up to
it.
summits. There's
Mhm.
no way to communicate with them,
I
right?
see.
Pick up the phone and find out what are the rules. So
Okay.
once they change their position, then the industry kind of
Mhm.
reacted. And now effectively these programs are paused or shut, right?
I mean, okay. Other thing I want to understand, yes, more probably there's more scrutiny on this, but have you seen any scrutiny on HELOC and 401ks taking loan against that?
No. I
No.
mean, broadly, there's more nuances to it, but
Okay.
the high level answer is no. Those
Okay.
are
Mhm.
acceptable sources of funds.
Okay.
And from a USCIS standpoint, as long as the funds are secured, I mean,
Mhm.
two things. One is they are traceable back to a lawful source,
Mhm.
and then they are also secured against
Mhm.
like a hard asset. And
Mhm.
the third, which is where the 401k nuance is important, is they are
Mhm.
directed by the applicant. Then these are, you could say, the gold standard of
Got it.
source
Mhm.
of funds, right? So
Mhm.
these are the three most important distinctions.
Awesome. Okay. Sounds good. Thank you. One more question about the timeline. You said it may take 6 weeks for the source of funds and then up to 6 months from USCIS to receive the approval, right? And so, I mean, for example, one question I have is was like, let's say I have this different source of funds, 401k, HELOC, and a bit of stocks. And should I already invest it before I file with the USCIS or not? Let's say USCIS takes 6 months and they reject the application. So what will happen to my funds? Will I get it back after rejection or will it continue to stay?
That's a great question. And this is where there are two distinctions to draw. One is between funding and the other is filing. And right now we are in the last 4 or 5 months of the program, as we know it. We have a deadline coming up on September 30th. And I always like to tell people that hope is not a plan. So
Mhm.
yes, we can hope that it's extended, renewed, whatnot, but we have to operate within the facts that.
Okay, maybe you can share more details on the deadline. I'm not aware.
So basically, the last date to apply for
Mm.
EB5 under
Mm.
the current rules
Mm.
is September 30th of this year.
Oh, really?
And
Okay.
after September 30th, for all intents and purposes, the program is shut, right?
Oh, September 30th?
Yeah. I'll add one more
Mhm.
clarification to this,
Mhm.
which is the program technically is still valid till
Mm.
September 30th of 2027.
Mhm.
However, anyone who applies after this September 30th deadline
Mhm.
is subject to the change in rules.
I see.
So if you go to an attorney on October 1st, for example, and if you're like, how much should I invest?
Mm.
Their answer candidly would be, I don't know. It is 800, but
Mm.
it might change. What is the sustainment period, as in the 2-year period, right?
Mm.
I don't know. How many
Mm.
jobs? So on and so forth.
Okay.
And a recommendation would be, as it was in 2021,
Mhm.
is just hold on to your funds. Like
Mm.
let Congress reauthorize it, and then
Mm.
we will file when the rules are certain.
Okay.
So that is the deadline, which
Got
is to be protected under the current rules.
I see. I see. Okay. Sounds good. Okay. Now coming back to the original question, right?
Oh yeah, the funding and filing.
Mhm.
So because we are in this last 4 or 5 months of the program, the projects are being subscribed to at an increasing velocity. So a project that you like and is available now, and there could be 30 spots present,
Mhm.
2 weeks later, it's off the market.
Mm.
So people have wired
Mm.
funds to
Mm.
lock in their spot.
Mm.
And even the projects, they want to close their funding cycle at the soonest, right?
Mhm.
If an investor says, hey, I will give the funds later versus someone is able to fund now, they'll take
Mm.
the investor funding sooner. There is a mechanism around this, which
Mm.
is a lot of projects ask for deposits, which is we understand you're working with the attorney to get your funding validated. But in the meantime, transfer 100K, 200K to us so you can lock in your spot.
Mm.
So this just means you're funding the project, you're not filing.
Got
So
it.
you only file after the full 800K is in escrow. And again,
Mm.
the funds are in escrow. They're
Mm.
not with the project itself.
Okay, so the project 100K you'll be just locking in, then another 800K you have put into the escrow, so it will be 900K maybe.
700.
So
The remaining.
the remaining, so okay, in the escrow, and then you file it. And in
Yeah.
case USCIS rejects it, then we can take that money back from the escrow. Is that right?
I was going to come to that. So
Okay.
these
Mm.
projects have a denial refund guarantee.
Mm.
Right? So
Mm.
they say that if you have funded the full 800K, it's been
Mm.
vetted by the attorney. And for
Mm.
whatever reason, if USCIS rejects it, then we'll
Mm.
refund you the full 800K.
So
So
we need
that
to.
is pretty
Mm.
standard in EB5 right now.
So we should go with that, whatever the contract with the company that we're investing into. Is that what you're saying?
I would say that's like a standard clause in all contracts in
Okay.
EB5 today.
Okay.
If it's missing, it's like a big red flag.
Okay.
So that very rarely happens, or
Mhm.
that happens with newer upstart regional centers who just don't have the liquidity. Like let's say they're doing a $30 million project.
Mm.
They just don't have reserves
Mm.
available to refund
Mm.
someone. But the
Got
larger projects don't have that
Mm.
issue, right?
Okay.
Because EB5 is just one part of a broader fundraise that they're
Mm.
doing. And the
Mm.
developers, I mean, they're billion-dollar companies
Mm.
and bigger. So they have like healthy balance sheets, bank balances to be
Mm.
able to refund investors if the situation ever arises.
Got it. Makes sense. Makes sense. Awesome. Thank you.
Awesome. These are great questions. Any questions on your end? Hari, Rajiv, Bhaskar?
No, all good on my end.
I mean, not on the finance part, but I have something on the project types or the EB5 types, if that's
Sure, please go ahead.
something help. So, I mean, this has always been a challenging decision, rural versus high unemployment, right?
Mhm.
So, I'm in a situation I finalized two. One is, next to my home. It's a commercial project, which has very good growth, but
Mhm.
it's in high unemployment. And another one is rural, completely in remote, somewhere in mountains. They are building a cabin or something that I don't even know where it is. Okay, but so there are two priorities for me. One is get the EAD faster, quicker, and the second thing is get your conditional quicker. 5 to 6 quicker. I mean, conditional may follow 5 to 6. But so I mean, I couldn't make up my mind at all, which is the best, because every day there is some news coming out, some differently. Like I think on March 30th, USCIS clearly stated they are prioritizing rural. I mean, that has been the statement for last couple of years. But I did see the high unemployment urban projects have got, some of my friends got conditional green cards in 18 months itself in the TA projects. So I was not able to make up my mind, is what I'm seeing is the right, or is what USCIS is saying is right, or is it, how do we choose this?
You're appreciate you asking that question, but what I'll also say is you're not going to like my answer, which
That's
is
okay. Yeah. I mean, I'm looking for opinion, again.
yeah, of course. I mean, A as a category, unfortunately, is right now. And I say that because in terms of the best time to invest in HUA, it was 2024 till the middle of 2025. And there are two, three factors why I say this. Number one, yes, even for a project that's USCIS approved, the developer has that I-956F approval, it's taking 18 months. And number two, our EAD validity is only for 18 months. So for whatever reason, if you have to switch over to the EAD and we have to file for an extension, there's no automatic extensions too. So there's a chance the new EAD would be delayed and we might be out of work status even after all of this, like a very premium path. Number three, and this is where that September 30th deadline 26, 27 is important, is when the last time EB5 was reauthorized, they said that, or the perception was, they would give 10,000 visas for anyone who applied for before 2022, and the reality became 7,000. So if our petition is outstanding and it's not yet been processed, and whatever Congress decides later on, it might even reduce the number of visas that might be available. Which comes to my next point, which is retrogression pressure. So with HUA, there's 6,000 visas outstanding, only 1,000 visas per year. And even that can change after 2027. So again, overall, considering these various factors, it's simply not worth investing in, regardless of like project quality, regional center reputation, what have you. What I would say as a substitute is, again, I don't have an understanding of your professional background or profile, but you're way better off building your profile and applying for an EB1A versus doing HUA EB5. And sure, you might be RFE denied. You might have to apply again. So it might take you 2 attempts for EB1A. Even then, your green card will come in sooner than it would through HUA EB5. And the benefit is you'll be able to do it at a fraction of the cost. So,
No, I agree with you. I mean, that's where I was going 6 months ago. Okay. In fact, I am qualified for EB1A, but I mean, there's a lot of documentation to be produced. But the thing is, there is high risk now for EB1A. Okay. So when I say high risk, the system is gambled. That's very clear to USCIS. Okay. So they are behind every EB1A application, and there are 80% RFPs now. Okay. So although I mean you have everything that you can prove, but someone need to listen to it. The people who are going to listen, they see like one out of 10,000, they won't be able to trust us, right? So there is 80% risk of getting RFPs, probably 50% risk of denials. Okay, that's on the EB1A. At the same time, if you really see the market conditions, EB1A is good. We still need to continue on it, considering the risk, and we still need to continue on H1B. And it's very tough to move between the projects. There is no guarantee about the projects. Okay, but at least knowing that after September you don't have an EB5 option, but you can pull the funds before that. I know I'm thinking, go for EB5 parallel track, try for EB1, right? At least EB5 will guarantee you EAD. You have ability to keep your status for 18 months. Maybe you are better off having a conditional and be on your own, right? That's where I'm thinking, but I would like your expertise, advice.
I'm very familiar with the challenge of EB1A. It took me 3 attempts to get it. So, and now day to day I do EB5 for
It
professional.
changed, that the time everyone is saying, even in EB5 case, right? People are still saying, we got EAD, 5 to 6 approved in 9 months. Someone say, they got EAD in 4 months. And the first question I ask is, tell me when was that last happened? They'll say, no, okay, it happened in 2023, it happened in 2024. But no one is saying, what happened in 2025 or 2026 so far.
I mean, our thought process, any applicant that we work with, is always like proactiveness. And I mean that even on the EAD side, because if you do nothing, then the system defaults to it's a government system, right? So it's going to take 6 months, even 9 months for the work permit, the temporary work permit, travel permit, the EAD to come. And what do I mean by proactiveness? There are 6 action steps you can take at the 90th day mark. So there's simple ones people do, which is calling USCIS, initiating a level 2 service request, emailing USCIS. But there are further steps to take. Freedom of Information Act, Ombudsman request, congressional inquiry. And I'm talking for the EAD alone. You can file a writ of mandamus. A lot of people are not aware of this. Unfortunately, a lot of law firms don't have billable hours. So they're like, hey, just take a chill pill. So they don't even share this or help with this. And number 3, for people who are aware, it's inertia. They're like, oh, let it take its time and come. Let me not be proactive about it. So I personally, and as a firm, we just believe otherwise, is it's a government system. So delays are bound to happen. So we have to set reminders on our calendars and do these soft and sometimes, if it comes to it, even hard escalation requests to get the benefits that we are owed at the timeline that they were promised, right? So taking a step back, I just want to comment that even on the ED AP is not that delays don't happen, but many people aren't even proactive about that, right? So in terms of the strategy, happy to sit down and have like a one-on-one
Yeah.
conversation about this.
Yeah, no, that's a great insight. Yeah, we would like to connect with you as well, because this is very like crucial time.
Yeah.
If not now, there is no time again, right?
Yeah. I've shared my Calendly in the chat. So for any of you, if you want to chat one-on-one, please feel free to reach out.
Right. I think I already got one sort of insight. I knew that there were sort of personal loans you could take to satisfy the loan requirement, but I think the insight is that it's already like they don't accept this anymore. I guess that was the key takeaway for me. Or even if they do, it's capped to 150. So I guess yeah, that's going to be a major blocker.
I mean, since from what I could gather earlier, you're planning on filing from abroad, there are other sources that are possible. Like I was saying, right? It depends on the country, the jurisdiction, but loans against property or assets abroad, or even gifts from friends and family. So
Mhm.
those are alternatives to seriously consider and take a look at.
Yeah, that's correct. I did see that come up. But I think, yeah, I don't know. I'm still evaluating this. I think it has a very high cost and risk, and
Hmm.
also I need to see the property at least, and make that decision of investing it.
Yep.
So might as well at least evaluate other options. But I'm surprised to see that it's also being like even the investment options are now being sort of scrutinized by the government on that level. And I see that there are rule changes coming up. So I did foresee some other programs being, having higher rates or increasing rates of RFEs and, scrutiny. But I also, now that you're saying it just feels sort of not surprised, but I'm like, well, this is happening everywhere now. Even on the investment side, say,
Yeah. I mean, there are alternatives to consider, especially
Mhm.
if you're not just from an entrepreneur background, there are multiple, like you could say, even more alternatives to consider. But even if
Yeah,
you've been in industry for 5, 10 years, you're in tech, healthcare, finance, there O1, J1, L1, these are options that are available based on your country of citizenship, country of birth. And on the green card side too, there's EB1A that we briefly touched on, EB5 that we spoke
yeah,
a lot more about. And these are the two main options that people consider. And interestingly, the US system is set up in a way where your work visas are governed by your country of citizenship, and the green cards are governed by your country of birth. So if you're not born in India or China, you're actually, I mean, there are other green card paths available to you, even beyond EB1A and EB5.
yeah. Thankfully, that one I got saved by that one. That one doesn't apply to me. India and China path. I think that's clear.
Okay.
But thank you,
And I'm
Nikhil.
happy to have a follow-up conversation because these discussions don't apply to you as much, right? Like if you very likely don't even have to go through the EB5 route if you're not.
Yeah, that's exactly my takeaway from this. Thinking I do have other options, and maybe this is getting more riskier. So, yeah, probably I'll explore the other options first. But happy to book a time if that's what you also do. I thought EB5 is EB5 is your main forte, but if not, then I'll happy to book a time.
Yeah, happy to help on my day-to-day. I help with E2 as well, which is the investor or the entrepreneur-based visa. It's also investment
Okay.
related, but fraction of the amount of EB5. So happy to take a look at your case and next step.
E2 is the investor visa, right? It's with 150 to 100K. I think
Yeah.
that's what you need to invest.
Yes.
Yeah, it does come in the treaty of US. I think it does. Actually, let me quick.
That's a very strong one.
Yeah,
It's for 7 years.
yeah, and I think it allows you the only risk for seed in that one is you getting landlocked in US because they only give you visa for 3 months, I believe.
7 years.
But that's not right away, right? You can renew it up to 7 years.
Correct. You can start renewing it
Yeah.
at the 1 year mark. Yeah.
Yeah, yeah. The renewal is it's painful, but it's one option, of course. It's a good option. I won't lie. Yeah.
Awesome.
Thanks. I'll have a look at your calendar and I'll book a slot. Thanks.
But I appreciate you taking the time and to all of you as well. And in case it can be helpful in any way, please feel free to email me, set up some time, and have a wonderful rest of your week. And hope to see you
This is
next time.
really helpful. I mean, I do follow you on Facebook. I think you did answer my couple of questions as well.
Yeah,
But yeah, I did schedule time. We'll talk later today.
sounds good. Thank you all.
Before we
Thank
drop
you
off,
again.
I'll just join now. Can you help me answer the other question?
You're saying something, Ganesh? I'm sorry.
Anakin, I just joined and I just heard that there is another investment option with 50 to 100K for 7 years. Can you just tell me about it?
That's an E2. So it's for people who have citizenship in countries outside of India. So
I see.
is one of the countries. Of course, the European countries are there. Canada is there. So
I see. I got it.
That's based
Okay.
on like
And okay, cool. Yeah, I'm from India, so probably not up. Thank you. Thanks so much. Yeah, it was great talking to you and a lot of questions answered. I got a lot of insights, and yeah, I think I'll also schedule a call with you and follow up with some of the other questions I have. Thanks so much.
Sounds good.
I have
Thank
a
you all.
question,
Oh, yeah.
Nikhil. So you mentioned about that the person should be a non-Indian citizen for that E2 route.
Yeah.
Uh,
So it depends on the country the US has a treaty with. So there are over like 100 countries the US has a treaty with for the E2, but India and China are not one of them. Australia, UK, Canada, most common countries where people are Indian origin, but they have settled there and they come to the US on an E2.
So it can be like you were originally an Indian citizen, but then you got, let's say, German citizenship. You are still eligible for that.
Exactly.
Okay, got it. Thank you.
Awesome. Thank you, folks. Speak soon. Have a good one.
Thank you so much.